I get started, I would like you to know that we have some sign-up sheets in the back of the room. If you want to get on our email and blog list and hear about notes that we have for sale and things that we're doing, please be sure to sign up, and we'll notify you when we have important news to send you. We won't bug you with a lot of spam. Thank you all for coming out this evening. We really, really appreciate it. And before I get into our short, and I guarantee it is short, presentation, I would like to introduce our management team to you so that you kind of are familiar with who we are. First is, and raise your hand on card name, Chrissy Jones in the back of the room. Chrissy is the director of the company and is our chief financial officer. Tyler Hoppy is also director, and he is our attorney. Nancy King is our office manager and slash administrator. Andy Vistica. Andy runs our trading desk. Larry Canfield manages our pricing desk. Dan Avila is in charge of lender acquisition and lender relations, and Mark Perchelik is our IT specialist. So, again, thank you all for coming. We are currently in a situation where there is the largest transfer of wealth, at least in my lifetime. The real estate bubble that burst in 2006 and 2007 has created unbelievable opportunities for those that are knowledgeable about the business and are prepared to take action. We're going to talk a little bit about us wanting to share with you what we've learned during this transition and what we're doing, and introduce you to a world of trust deed investing and what we've learned about real estate finance. We want to introduce you to a world of high yield, secured by real estate, where you stay in complete control of your money, receive monthly payments if desired, and have complete transparency with no toilets, termites, or tenants. And I've had them all, toilets, termites, and tenants. Continue to have them, and I want to show you a much better way. Now, while we have been circulating and having our cocktail party, we've had some skylines up here. I'm sure that everybody's been able to identify two of them as San Francisco and Los Angeles, but we could have selected any probably major city in the United States, or the world for that matter, and we're looking to see if anybody recognized any commonality between the buildings that are marked with red arrows. Yes, there is commonality, and that commonality is they're all banks. They're either banks or they're lending institutions who make the bulk of their profits through real estate finance. So our purpose tonight is to learn how to become the bank, where you can earn 2, 3, 4 times what you're earning now in a transaction that's completely transparent, all closed and funded through an escrow company, with liens on the property recorded in public record, all documentation handled by an attorney, a servicing company, that's a third-party arm's-length transaction, receiving all payments and dispersing those payments to first, taxes, second, insurance, third, investor, fourth, Main Street funding. And every transaction protected by an equity position in the property of 30 to 35%. I'd like to share with you what areas that we, Main Street funding, concentrate on. There's 4 areas. The first is private lending to investors. These are not in any necessary offer, except that in total dollar volume, the last one that we talk about is the one that we do the most dollar volume in. But we loan money to investors who buy real estate to rehab. We loan money to those investors who buy 1 to 4 unit residences that are going to be owner or non-owner occupied. We loan them the money to buy, to rehab, and then they flip them. It's usually a 6-month to a 12-month hold. Secondly, we create notes and simultaneously buy them at the close. For you real estate agents in here who are having trouble getting buyers financed, we will show you and your seller how to write a seller finance note. We will do all the documentation through an attorney, and we will agree to buy that note at the close of escrow, thereby giving, number one, the agent and the seller the ability to sell at top price, to sell quickly, and to get all cash. In fact, we just did a seminar at the Board of Realtors on Thursday, and we have several of the people there that were there that came here tonight because seller financing is such an interesting portion of their business. Third, we purchase notes from note holders. These note holders are typically seller finance people that sold their house and carried back a second, or carried back a first, and now for some reason need or want immediate cash. We buy those notes from them. And fourthly, we purchase non-performing notes from lenders and hedge funds. These notes, Main Street Funding gets to rework. We do a workout on them, we get them to be re-performing, and then we resell them to either private investors or institutional investors at a handsome profit, or we keep them for cash flow. There's a great many benefits to the investor for seller financing, or for trust deed investing. And the first is, wrong way. That the note that we buy or create is secured by real estate, by a real piece of property that you can see, you can touch, you can visit, you can walk in, you can take pictures, and it's permanent. Other benefit is its safety and its low risk. As long as there is value in the real estate, the investment is secure. Great returns and liquidity. In today's environment, it's difficult to find a decent investment that's safe. Because of the insistence by us on what we buy to have 30 or 35% equity, you can figure that the return is going to be great, even on a very safe investment. They are liquid. Unlike real estate, notes are traded openly every day. If you want to see the size of the market, simply Google, search for note buyer, and the last time we did it, there were 44,500,000 pages dedicated to note buyers. That's how big the market is and how liquid it can be. People are very familiar with investing because real estate ownership is so common. You don't have to teach people about real estate investing. And if you're on a fixed income or if you're looking for monthly payments, it's easy to create cash flow with these notes. Now, I know, and I'm certain that all of you know, that in the recent past, we've been deluged with scams and scandals. Everybody needs to look at every investment with a skeptical eye. Everybody knows of the visible scandals such as Bernie Madoff. Maybe you're not so familiar with some that I'm familiar with, like Russell Wassendorf. If you don't know who Russell is, Russell was a classmate of mine in college. He was just arrested about 6 months ago for scamming $200 million from people in northeast Iowa.
Go Iowa.
How about as close as Folsom, where Anthony Vasselhoff scammed $40 million from his Mormon church friends. So I know you should be very thoughtful and skeptical of any investment that you make. The nice thing about trust deeds, however, is that they are transparent. Everything is recorded with the county. Everything goes through a servicer. So the investment fund, Main Street Funding, for example, doesn't touch your money. I'd like to give you a couple of scenarios, one scenario for each of the four categories that we talked about. The first scenario is that you can buy a secured note at the closing table. The way this works is simply an agent finds a buyer for a property, in this case, to make the math easy, $100,000 sale price. The seller accepts a down payment of $20,000, and believe me, one of the problems that we have today, and I think the real estate agents in the room would agree, is that there are plenty of good buyers out there that in the past several years have either had a short sale, a foreclosure, or some kind of problem. They can still afford to buy a new house, but they cannot get conventional financing. That's a very big problem today. They have $20,000 to put down on this house, and I know that's not Sacramento, but it's easy to do the math. So the seller writes a first trust deed for $80,000, takes $20,000 down, and we, at the closing table, immediately buy that note for $65,000. So the seller, at the closing table, gets $85,000 cash. We have created a note that pays us 8 to 10% and possibly more on an investment that is secured by a property at 65% investment to value. The worst thing that could happen probably is that the buyer, the borrower, quits paying. We have to take back the property, sell it at a discount, and we probably, because it only has a 65% investment to value, we probably can still make more than we would have made if we just collected the interest on it. The second scenario I'd like to discuss is in our private lending quiver arrow. An investor has a chance to buy a property worth $500,000 in today's market, and that investor can purchase it for $250,000. There's a problem. It has to be closed in 5 days, and the bank only wants cash. The investor doesn't have the cash. Do you think that the investor would care if Main Street is funding, loan the money on that loan to buy the property, and we charge them 14% interest for 6 months, if that meant they were able to close on the deal? nobody would pass up that opportunity. The third scenario we want to call, that we get involved with on a daily basis, is Mrs. Johnson calls our office and she has a note secured by a home she sold 6 years ago. She needs cash and she wants to sell the note. The house is worth $195,000. The people that are in the home, the borrowers, have paid every month for 72 months on time. The payment on the note is $1,000 per month, and there are 288 months left. An investor purchases the note for $94,305. The annual return is 12% on an investment to value of only 56%. So the investor puts up 56% value of the house and receives a 12% return. Pretty nice. The fourth one is a lender desperately needs to clean up its balance sheet. Just about every lender in the United States right now, the loans on real estate, by the way. The balance sheet includes 100 delinquent loans that the lender agrees to sell at 20 cents on the dollar. We primarily buy delinquent seconds, and 20 cents on the dollar is somewhat high. We don't pay 20 cents on the dollar usually. We buy these 100 notes, we get them re-performing, or we get a large portion of them re-performing, and we sell them then to investors, either private or institutional, that buy these loans from us, providing us with a nice profit, or we keep them for cash flow. Remember, it's good to be the bank. We can be the bank, but are much more flexible, creative, and fast. We can buy we can fund a property, we can buy a note, we can do whatever we need to do in 5 days. We've done it in 3. Very, very quick. So if somebody desperately needs cash, we have the ability to close very fast. We simply can do things that banks cannot or will not do. We get 2 big questions when we talk about trust deed investing. The first big question is, can I use my IRA or my 401k for this type of investment? The answer, absolutely. There are companies throughout the United States that administer self-directed IRA plans. The one we use the most is Equity Trust. They're located in Orion, Ohio. Their website is www.trustetc.com, www.trustetc.com. They are extremely good to work with, very professional, very helpful. In fact, if you call the office, we'll give you the name of a person that will help you set up your account. And then you can make decisions what you want to do with the money. There are many other companies, by the way, that do this very thing. And we have a list of them in the office. If you want us to give us a call, we definitely would share those with you. The second question that we get is, what does it cost me? We have no investor fees whatsoever. Never. No investor fees, ever. So it doesn't cost you anything except what you're investing in the note. So it all boils down to our philosophy of win, 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 win. The first winner, the investor. It's a high yield secured by real estate that's completely transparent. The winner, the homeowner or the rehabber. When we buy delinquent notes, our main focus is to keep the homeowner in their home. We'll do a workout with them of whatever we have to do to keep the homeowner in their home if that's their desire. If it is a rehabber who now can maybe do 1 rehab, what we want to do is give them the ability to do 10 by using our money to do it. The winner, is a lender whose balance sheet is in the toilet. They're able to get rid of investments or cash immediately and clean up their balance sheet. And then, of course, the winner is Main Street funding. We have the ability to get quick investor capital to help grow our business. We can stay away from the banks. We don't have to fill out applications. We don't have to wait for their decision. We don't need appraisals. And possibly more importantly, we avoid the rule of only being able to have 5 loans at a time. So if you know anyone, or if you are interested at all in learning more about trust deed investing, please give us a call at the office. We have business cards in the back. People that are introduced, if you have questions, you can certainly ask them. They're all very knowledgeable about the business. If there's a question that they can't answer, they'll certainly direct you to the right person. We would be excited about teaching you what we do and discussing it with you and working out an investment program that you're interested in, that meets your needs and demands. And again, I thank you very, very much for coming. To the investors that we have that are here, thank you for your trust and your confidence, and I don't think there's anybody here who would not say that they're delighted with the returns that they're getting. So again, thank you, and we really do appreciate you coming. Enjoy the rest of the evening. Thanks.